Let's check in now with Brian Hoops, Midwest Market Solutions. And Brian, boy, these markets certainly are taking a beating today, and the grains led downward here by the soybean market, but double digit losses pretty much everywhere you're looking right now.
Yeah, exactly. We had thought, you get a forecast of rain or actual rain that would fall, you could see a pretty sharp drop in the market. But, at this point, that rain forecast is 5, 6 days away, and the market's reacting to it. So I think, it's a combination of that increased rain chance in the forecast, along with a big drop in crude oil prices, as maybe there's a pause to the fighting between the U.S. and Iran, and the fact that now that China is getting involved and asking Iran to come to the negotiating table and work out an agreement with the U.S. As I think the trade is starting to anticipate that this maybe has a little bit better chance of actually occurring and taking place. So we are seeing a big setback in the grains. The forecast is less than ideal. Longer term, we're still looking at above normal temperatures, above normal precip, or below normal precip. But once you get some chances of rain to come into the marketplace, that can really take a lot of the steam away, because if you get decent rainfall and hot temperatures, usually you have a pretty decent sized crop. So the top end of the yield is still potential, but you're going to have this rain that's coming through that the market is dialing in. And until it actually sees it in the gauge, we may not react much more than what we're seeing this morning. But certainly a big sell-off has a lot of the producers thinking about their crops that's suffering over the weekend, and yet the markets are down sharply here as they come back to trade on Monday.
No, probably not a big surprise of what we're seeing in the cattle market right now. Judging on what we heard late Friday when we got that news from USDA about the border opening back up, but we are seeing some pretty sharp losses here in the cattle.
Right. Yeah. You probably would have thought, based on cattle on feed or the cold storage or the semi-annual inventory reports, we wouldn't have such a big movement in the cattle. But then the USDA throws another piece of information at us that they are going to start reopening the border. And, I do think it was assumed that we would have a border reopening eventually when we had the screwworm virus here in the United States. Once that was confirmed, it kind of opened the door that we just as well open the border to these cattle. But you're seeing most of the weakness this morning in those deferred contracts, like November feeder cattle and on back. We're seeing big losses in the January, March, out into next April, because that's when the supplies are actually expected to hit and become the largest. We're going to open on August the 24th in Arizona. If things go well, we'll start opening 2 more ports in New Mexico, and that could allow a fair amount of cattle to start coming through. And so the market is anticipating by the winter into next spring, we will have maybe a lot of more cattle on feed in the grass pastures than what we have had in the last 2 years, significantly more with the opening of the border. So that's what the market's trying to price in right now. Again, it's not that the cattle are coming across tomorrow, that we're going to have a big ample supply tomorrow, but this does change the supply of our inventories in the long term, and that's what the market is struggling with and trying to price discover at this point in time with these lower values this morning.